This episode is sponsored by Appian, a technology leader in driving digital-first insurance transformation. With Appian's low-code automation platform, you can build enterprise apps and workflows rapidly in an agile environment. This episode is sponsored by Exactuals, perfecting insurance payments and the data driving them. Let's talk about insurance. What do you think? How long have you been in this? Yeah. How do you describe what you do in the insurance space?
Yeah. So thank you. It's obviously great to talk with you, and hopefully we can see each other in person soon. I've been a lawyer in the insurance industry for almost 25 years, working exclusively in the insurance industry. So I don't do like litigation or insurance coverage work. Don't go to court. I represent insurance companies, brokers, investors, service companies, really anything in the community or ecosystem on transactional and regulatory matters. So, trying to keep clients on side, stay out of trouble. If they ever get into trouble because they've made a mistake, try to minimize the disruption to their business and minimize any enforcement action. Help clients buy companies, sell companies, help them enter into partnerships with carriers or retailers. So it really is everything having to do with how companies transact in the insurance industry.
And I think that we first met Asaf Wand from Hippo. He made the introduction. I was looking for a law firm that knows what they are doing, especially in this space, because I had a startup in the embedded insurance. Sadly, it was a little bit too early, and now 3 years later, that's the thing. But before I even jump into embedding insurance, the challenges of doing that as an insurance company or as a service providers, because there is a lot to talk about from the legal part of it. Let's talk about things that you deal with, and you already covered that a little bit. So it's more about, regulation. Now, regulation that's basically, how can I say that? Keeps us happy-ish. I don't know how, not being that's such a bad description of regulation.
Yeah, I think. Yeah, we met. I think we met at On-Ramp, and I forget it
was On-Ramp the first time.
Yeah, and it might have been the second one they had, and so it was at Soldier Field.
Oh yes, so that was the first time that we met face to face.
Yes.
Yeah.
Yeah, maybe we met before that. I don't know, but yeah, no, Asaf has been great, and his team at making ton of introductions and referrals, over the years, and they're great with that. I was on I was interviewed by the Israeli InsurTech Accelerator last week before he presented to that community. Did a great job, and he's so direct. It's so getting people to ask direct.
Yeah, there is a tendency. They call bold, blunt, or rude. Really depends on how you're dealing with that at the same day.
Yeah, no, I love that. Like we don't like to waste a lot of time, and I think I'd rather just hear it straight, right? So, but yeah, I think he introduced us. So I mean, just you think about. I just had a call this morning with a new connection. Was looking to get do something in the embedded space. It's important to understand that it's a 50-state system. There are 50 different regulators or chief regulators, and then their staff, obviously, those are the people that are there, for careers and know the business, and they stay when the commissioners leave. But the commissioners are either elected or appointed, probably roughly half and half around the country. Either way, they're political in some way, either because they have to run for office or because they've been appointed by someone who had to run for office. So there's it can be somewhat political, but it's professional. I'd say the staff and folks in the industry, I mean, they know what they're doing. They come at it obviously from uh, the perspective of protecting consumers. So when you say, makes us happy, I think that's what you're getting at is like it keeps us safe, right? Consumers, the
Yes,
regulated industry.
I think that I'm going to remove that part. All that happy,
Okay.
that was I was more adding to protected, safe, and not abused by companies.
Oh, then
That's
then we're happy when we're safe and
yes,
protected. I think and that's their job is to protect consumers, um, protect company solvency, but ultimately it's everything is about the consumer. Insurance is a public utility, so to speak, which is why it's regulated. So it's different than other retail products. So we a lot of times get clients say, well, um, this retailer does this and they're not regulated, or this other company does it, and you say, well, they're not an insurance company. Insurance is regulated, just like power companies are, or telephone companies. It's a regulated industry. It's 50 states, so there are different laws in every state. Although the main standards are largely consistent. You need a license to sell insurance. You need a license to get commissions. You need a license to take on risk as an insurance company, which is a much, obviously a much larger infrastructure you need for that. But it's something you need to know. Regulators look at websites. They're looking out for consumers, their perspective. Yeah, because that's their job. It tends to be, they'll ask themselves, is this good for the consumer? Does this hurt the consumer? So in terms of innovation, generally they ask themselves that question now and they answer it, yes, it seems to be good, or they don't know, they're not aware of anything that would uh, lead them to believe that innovation is bad for the consumer. How could it be bad, right? It's terribly needed in the United States, especially. The industry needs it. And regulators, I think, even though it can vary by state as to how they regulate, largely they've facilitated InsurTech in the U.S., or at least not been an obstacle. That's from the leadership on down. I think they've tried. They've done some things in anti-rebating, for example, and there are definitely states that are certainly welcoming to startups because they want the commerce and they want to encourage new businesses, in part because they get some jobs out of that, maybe some taxes. But there's that's the one thing about the 50 state system is, unlike other countries where there's only one regulator, where if that regulator doesn't like you or they don't want you to be able to do something, there's nowhere else to go. In the United States, you can find a state or a group of states. That doesn't mean that they're easier as regulators. It just means that maybe they have another reason for wanting innovation and they want to be seen as good for business. Captives are an example. There's a number of jurisdictions that are competitive in attracting captives, like Vermont and Utah. And so their laws are written so that they allow people to do business the way they want to do business. Again, it doesn't mean that they're not strong regulators or that it's easy to do business there, but laws can facilitate or at least not be obstacles to business, right? And so you see a fair amount of that. And so our 50 state system kind of allows states to compete with one another a little bit. They also compete with the federal government and they compete with other countries, right? So you have a startup that, let's say it's an Israeli startup that is thinking about, okay, where are we going to expand to? We have proof of concept. We proved that we can be successful. We have customers in Israel, and now where are we going to go? We're going to go to the United Kingdom. We're going to go to the United States. Where are we going to go? So in part, you're just like with taxes. There's a way for regulators to help attract good businesses, and so you see that in some states. Some states, you see something else, right? You see maybe more aggressive regulation or regulators that act more like prosecutors than regulators. So it's and it depends on your business model. You have to kind of know what you're trying to do, what you need, what sort of customer base you need. Do you need to go to New York? Do you need to go to California? Can you start in a smaller state and prove your business that way?
I feel better stopping you because you're already answering a couple of my follow-up questions. And I wanted to start from, how open the regulators are to innovation. Where should they start? Do they have the infrastructure? Do they have the knowledge for that? And then you already jumped into giving the examples of, the complexity of the 50 states and of course, actually the trade-off because, hey, if you were not burned in one state, you can always go to a different state. And at this point, I need to sort of pin that which state you should actually start based if you are, as you said, are you going to be an MJ? Are you going to be a captive? Which states is more comfortable or they have some sort of an incentive to start in that specific state. So, I'm going to take you a little bit back. So let's talk about the innovation part that you already talked because innovation is new product, new technology. You talked about Israel. There are people from, I don't know, from Utah, Motion Auto, that they are writing business in Arizona and a couple of other locations. That's also innovation. And, looking into a new state, sometimes it's basically, it's a new territory. So what is the approach and what are the tools that the regulators have for innovation? Are there sandboxes? Anything in that space?
Yeah. I think it depends on your business, the business model, carrier versus MGA, but also just the line of business. Where do you need to be to have to be able to execute on your business? Do you need to be in all 50 states? Do you need to be in the large commercial states like California and New York, which tend to be maybe a little more challenging on the regulatory front? There are no real sandboxes, I will say, like the United Kingdom has. That doesn't mean that there's not that there aren't states that are open to innovation and flexible and will be and are approachable. And most states are approachable. Certainly, the professional regulators are. But it depends on what you're offering to that state, right? Is it a state that is looking to innovate in the auto insurance industry, right? Like a Michigan or places like that that have a obviously big connection to the auto industry, or is it homeowners insurance where there's an issue with people on the coast getting coverage, right? Those are all things, and we mentioned at the beginning that it tends to be somewhat political, or at least there's a political undertone to a lot of this. Is what are you giving a state? Like what is the reason for them to have a practical sandbox or to do something maybe a little differently or interpret a law in a certain way that makes it more flexible? Doesn't mean that it's always tit for tat, but what is in it? You have to think about what's in it for the state. Their jobs, are there people that aren't getting coverage that would get coverage? It doesn't mean you have to offer that to a state, but that's part of the analysis. So, when you start a company, for example, and you think about where to domicile, right? If you're an insurance company, it's a very important consideration because that is that's the parent that you're going to live with for basically your existence, right? They're going to regulate all the transactions within your family. They're going to regulate how much money you have to do business. And so you're going to have a good relationship and be comfortable with them. That's why for captives, for example, companies go to Vermont, which is the gold standard in the U.S., where they have a very long-standing and professional captive unit, people that know the business. Doesn't mean everybody gets in, but they have people, they have infrastructure already, right? They have money to fund their activity, and they have laws that facilitate captives, and they don't interpret them overly. They're not rigid in their interpretation, and again, it depends on the business model. But they know the business, they know how to regulate, they know how to do it in a way that doesn't stifle innovation. And you can find that all around the country. Sometimes it just depends on what you're offering, what your product is, who you are, and who's in charge of the state, at that particular time. And most of the regulators are approachable. we have clients and others will ask us, from time to time, should we approach or talk to regulators, before we launch? And that again depends. What do you need from them? Do you have an insurance company that you need to launch? Well, then yes, you should, because you have to talk to them eventually. But if you're just an agent or an MGA and you just need a license and you're not doing anything that is terribly unique in terms of your product, except just doing it digitally, you don't really need to go to them. And sometimes you don't want to raise your hand and say, "Hey, look over here, pay attention to me." So it depends, but generally, the regulators, I think, are fostering innovation, or at least not hindering it at this time. There are different strategies for approaching states depending on the business model and what you're trying to do and what you need from them. I'd say both. It's a relatively small community of people, I think, that do what our team does. As a firm, we obviously have competitors and people that do similar kinds of work, but it's not a lot of people. It's pretty like we want to call it a niche, but it's not a lot of people that know insurance regulation in all 50 states and go to NAIC meetings and other conferences. They live much more exciting lives than we do. But you see a lot of the same people. Like when we're on deals, we see a lot of the same people on the other side, or if we're doing an agreement on behalf of an MGA with a carrier. The carrier's counsel is usually someone we know. So a very relatively small community there. Regulators do referrals. We have clients that give us referrals. There's a lot of word of mouth. I'd say, certainly the Israeli InsurTech community has been very good. I think hopefully we have a good reputation there, and we get a lot of referrals from that. And that's, part of why we wanted to give back and be a mentor and sponsor to this InsurTech accelerator. And just help people understand the U.S. market and help them come to the U.S. and grow. Obviously, eventually, we want them to be a client and sign them up and get paid for our work. But a lot of times we're just mentoring and helping people understand, helping them test their business case a little bit for what they want to do, and really just being part of that community. That's the one thing I think I saw early in InsurTech. I don't know if you were at the first InsurTech Connect in Las Vegas at that. It was like at a conference center where you set up meetings through that Umbrella app and met on like a piece of paper. Number 11. You'll meet on number 11, and the paper, someone would step, it would fly away. So you didn't even know who you were meeting. You'd just be standing there on a square. And what struck me, though, is that people were very open to sharing knowledge, sharing network. You could see that it was an industry that was really hungry for innovation, for new capital to come in, new investors and new ideas. And I think even the regulators saw that. There was a few that attended the first one, and then more and more since then. And now it's 10,000 people, right, coming up. But and that has continued. And so that's we just want to. I'm trying to continue to be faithful to that, where it's like it's community. People are trying to do really good things that are good for the industry. Obviously, good for hopefully my business in the end, but on a broader scale, good for the industry, good for the economy in the United States, ultimately good for regulation. If you can really get regulators to engage, just all good stuff. It was like exciting. I've been doing this, as I said, for 25 years, and certainly never been like I could say it was an exciting field to be in. Right? It's the easiest way to get someone to walk away from you at a party is to talk about insurance, but
actually, no. Surprisingly, no. I'll tell you what, somehow, when you have that conversation about insurance, surprisingly, people are starting to talk about it. It's not like talking about the dentist, right? Or taxation, but it has a lot of similarity, because once you give them understanding what's under the hood, or, and the backstage, people are actually curious. And I've been, I don't know, maybe it's my charming personality, but I've been in one or two parties, and pre-COVID, that we talked about, and what do you do? InsurTech, blah, blah, blah. And for the next hour, I'm talking about insurance. And it's funny, but people are actually interested. They don't care about it any other day, but it will be the same thing about, oh, what do you do? Oh, I work for the IRS. And then it's like a full conversation about benefits, taxation, etc., because those are things that people are not aware and they don't think about it, but they need to consume it if they like it or not. So it's fantastic.
Right.
Now, before I go back for that, I'll give a quick shout out to Jane Caribou and the amazing team of InsurTech Connect. And I do a little bit of work with them nowadays until ITC or maybe before that. And again, October 4th until 6th, Mandalay Bay. At this point, what I can tell you that in terms of numbers, it's remarkable how many people want to attend. It's so it's really a question of where is COVID going to be, because at this point it's like fantastic. It's like I think that people have so much cabin fever that they are just
Yes.
can't wait to go back and to meet people and to meet old colleagues. And as you said, it's one of the biggest industries, but it's such a small group of people that we keep, bumping one to another. And at the end of the day, those are, I would say, tens of thousands of the same faces that we keep meeting. And that I know it's big, but you have millions of people that work in the insurance industry.
And I think that's what people have seen, investors and others that were on the outside of this industry, right? They went through fintech and they said, what are we going to conquer next? And you look at insurance, right? How it's regulated, who dominates, how they dominate. And they saw, I think what you just described was, this is a huge industry, maybe one of the largest industries in the world. The U.S. it employs, I don't know how many people, right? I mean, there's independent agents everywhere. Critical part of the economy. The economy couldn't run without insurance. All these things, right? So it's mandatory product in a lot of ways. Homeowners and you want to borrow money, you can't drive a car without insurance. So people started to look at it and say, wait a minute, like this is an industry like in dire need of innovation, right? And what's the barrier to entry? Yeah, it's regulated, need some licenses, but to your point, it's relatively contained, right? And like the number of players and like who you need to talk to and the knowledge is relatively contained, right? As you say, you see a lot of the same people. So to execute on a strategy that is looking to innovate, take some of that market share. You don't have to take like a lot of market share away from homeowners insurers or auto insurers who have a really successful business. Asaf Juan said this the other day for the InsurTech Accelerator in Israel. Like you don't have to, like there's not much you have to do to be successful, right? It's such a huge industry. And if you focus and do what you're good at and stay focused and get the right partners and hire the right people, get the right partners, including investors, you could have a really nice business, right? That now you can take public or sell to somebody. So there's a lot of opportunity for success. We start talking about the embedded market at the beginning. I think people see that. And so to your point, when you mention insurance now, people know names like Lemonade and Hippo and these cool brands that now people didn't think about. They see, all the advertisements on television, but they're used to those as just, those cool ads for Geico and Progressive. But now you have companies that are really making news in the public markets. People are talking about insurance, and it's like the first time in my career where it's been a focus of people outside of the industry. So it's a good field to be in, now, certainly, and it's exciting to be part of it and to get to talk to people that are entrepreneurs and taking a risk and spending their own money and really working hard. Because that's the one thing that there's no shortcut to any of this. I've seen it at Hippo and others. Like when you go to these places, Hippo, Boost is a client of ours. You go to see where they work. You see people at their desk and all the monitors and tracking the policies they're selling. And like, there's a lot of hard work going on there. There's no magic, there's no magic. to, you get some money, investors, and put a brand out there, and all of a sudden you have a, $1 billion company. It takes a lot of hard work. And that's what people also realize, because of what you're partly what you're saying is it is a relatively small community. So there's only a certain amount of people to talk with and convince and partner with. So the execution is not easy. It's a lot of hard work, and obviously on top of the regulation. But then you have that's a barrier to entry to other people to get in. Not only do they have to deal with the regulation, they have to work really hard, and it doesn't happen overnight.
So let's talk about it. There are brilliant entrepreneurs outside. Let's assume one of them, sees Lemonade, Hippo, Hippo is more in the spec, so that's another buzzword to follow, and they want to get into insurance. Now, if we are talking about Buzz and Lemonade and stuff like that, when we are recording this episode, Lemonade reached like value of $60 per share, which is a little bit painful. But great entrepreneurs, SF, Austin, New York, Tel Aviv, London, wherever that may be, want to go into insurance. And the main market in the US, how should they start? Agency, MGA, full stack carrier. What will be the right combination for which product? Which state should they start in?
Yeah, all these are the questions we've been, and even before InsurTech, questions you get all the time, right? You have a business, you have a product that you think the market will respond to. How do you get it to market, right? So one, it depends on the product. Do you have a customer? As Asaf said, I think the other day, like who's your customer, right? Do you need to control the entire customer experience in order for your product and your business to be successful? Because then if you do, maybe you want to be a carrier, but the biggest challenge in all that is how much money do you have, right? If you are raising a seed round or a Series A, friends and family, right? You barely have enough money to pay the people, the engineers, right, and people you're working with, pay advisors to help you get a license. So if you barely have enough money to run your business, you don't have money to trap away in capital and surplus in an insurance company, right? To write, even a small amount of business. I mean, and to get a rating from a rating agency, I mean, you're talking. I mean, and you can do it for less. There are reciprocals like Kin and others. You probably have done it with Capital Light, but you're talking tens of millions of dollars, right, at a minimum. Now, could you do it with less? Maybe. You need a lot of reinsurance, which you need anyway, to be a carrier. But really depends how much money you have, how much infrastructure you have, personnel, because it's not just money in terms of capital. It's money to pay people who are going to handle governance, compliance, regulatory reporting. To operate a carrier is a very significant undertaking, heavily regulated. You're putting aside money that people paid you for the promise that you'll pay them on a covered claim later, right? So there's money sitting there, got to be regulated. Regulators have to make sure you're not using that money for some other reason, right? So generally you can't. It's very hard to start as a carrier. Lemonade being the exception, but they had $500 million and huge reinsurers behind them. That's an exception. Look at all the other successful startups. Hippo started as an MGA. Metro Mile started as an agency. They bought a carrier. You're seeing more of that where the companies, MGAs, are now either buying a carrier, building their own. Many examples of that, but almost impossible. And I think Asaf even said that on this call with the Israeli InsurTech Accelerator, like you can't. So that's probably right. I never, as a lawyer, it's not for me to say, but yeah, it's pretty next to impossible to start as a carrier to any significant scale. Although I've seen it, if you do, we have a client that's focused on health insurance for certain kinds of businesses. They started in Utah. They started as a carrier, very little capital. They're raising money now. So if you're going to do that, you could start in one state to test, your business and start in a state that might be more friendly to innovation. and that's where you're going to start. So you can maybe start as a carrier if you're going to limit your geographical scope, but to do a 50 state business, very, very difficult to start as a carrier. So an MGA model or an agency model will get you more quickly to market because the regulatory barrier is just need a license. It takes longer than it should, but it's still a relatively short period of time. And an MGA is really just someone who does some underwriting. It doesn't mean you're legally an MGA and regulated as an MGA, which a lot of folks don't understand or helps to educate them on. But get quicker to market with just an agency or an MGA. You can get more widely around the country as an MGA or an agency than you can as a carrier because you need more money to do that. And where you start depends on your business model. Where do you need to focus your market, right? Does it have to be in the more populous states, larger commercial states like New York and California, or can you go to Utah? Can you go to Idaho? Can you go to a smaller state because they have drivers too, right? Or they have people that need health insurance, right? It doesn't have to be in those larger states. If you can prove, if you're looking to do a proof of concept, you don't need to be in those bigger states. But a lot of folks want to just go right to 50 states, or they want to attack those larger markets because that's where the scale is, and that's what the investors are going to look for in the next round. So it really depends on the model, depends on the product, depends how much money you have. Those are the kinds of conversations we have all the time with people to help them kind of figure out what's possible for them to do, and within the period of time that they want to do it.
Of course. So agency is the simplest. You actually need a few $1,000s to start an agency. Now turning that to a digital agency and something successful, so that will be in the hundred thousands. You want an MGA, so the logo and the underwriting will be with your title.
Yep, and you've done
that will
it.
be a little bit more. And if you want to be a carrier, you need the millions.
Yep.
And with that, what's the timeline looks like?
Timeline for carrier. One of the challenges of being a carrier is if you build your own, there are we call seasoning requirements in maybe half the states where you have to be transacting business for 1 year, 2 years, 3 years. There's even states that require 5 years to show that you know what you're doing. There are exceptions to that for experience management and things like that, but that just shows you some of the obstacles in some of the states. So putting seasoning to the side, the process for the licensing a carrier or reinsurer process is at least a 6-month process probably. So it's a matter of several months and 6 months to a year or more with states that have seasoning. As an agency, you're talking 2 to 4 months. Let's say if you have your everything in order.
So it's like 40 hours to do the Kaplan course, then a few weeks back and forth with the state, and then open to other states. So
right.
to cut that, so by acquiring a carrier, if there are shares or Bermuda or something like that, does it cut the timeline? What will be the cost on that?
Yeah, it cuts the timeline. Certainly, that's how you get around seasoning, and that's why you see. You always see an active market for shell companies, right? People want to buy the license without the legacy business. And that's pretty competitive because there are a lot of startups that are looking for shells, which obviously keeps the price of those shells very healthy. That's one way to get around the seasoning issue. The timing to buy a shell, you got to do your diligence, sign up a purchase agreement, and then get approval from the domicile regulator, wherever the carrier is domiciled, one state or more, if it's, if there are multiple companies or if they're commercially domiciled in California, but generally one state to do that. And that's probably less than 6 months, but figure that's 6 months, right? From finding a target to signing up a deal to getting approval, you figure that's 6 months to do that.
So where are the captives enter this structure? Where should someone go like, aha, we should actually have build a captive?
Yeah, captive is another way. So this is why when from the beginning and still now, when people come to us and they want to share in the risk, right? You can share in profits as an agency with profit sharing, profit commission, bonuses. You don't need a risk entity for that. That happens all the time. If you want to share in the risk, you need a risk entity, right? So that's an insurance company, reinsurer, or captive, right? Where and that obviously you can get maybe more attractive profit sharing if you're taking risk, on the downside as well. Whereas you just profit sharing, you're only getting upside, so the numbers will be obviously different. But a captive is when usually we act as a reinsurer, where you have an MGA and you have a carrier that's your direct insurer, whether it's a fronting carrier that's got reinsurance behind it, or an insurer that's taking some or all of that risk that you're underwriting for them. Captive, you'd form a captive, pretty capital light. The rule of thumb, I guess, is you write $3 in premium for every dollar you have in capital surplus put in the company. And the captive allows you to take reinsurance risk on the back end, right? So you'd have a fronting company, let's say, that takes no risk, right? They reinsure 100% of it, and then they have their big Swiss or German reinsurer behind it that's taking 100% of that. Maybe your captive will take 5%, right? And so, hey, and then I think, and more recently, I've heard insurers and reinsurers asking MGAs whether they plan to take any risk. They want because they want to see that you have a skin in the game, so to speak, right? So that what you're going to underwrite, you're not just bringing premium onto the books to show you're running premium and to show investors or go public. You're taking this risk yourself, even if it's 5% or 10%. You're taking that risk yourself on the back end, so that if you write bad business, you're going to get hurt with them.
Right? I'm always surprised, positively surprised by how fast the reinsurers are adjusting, because we always think about them as like those big entities that are sitting way in the back, just running calculation and statistics and trying to understand where should they put the balances and the checks of the world. At the same time, they're quickly adapting. They were the ones that enabled this InsurTech revolution to start, and now they are already adjusting for that. So what do you think? Because we talked about Lemonade, Hippo, Root, Metromile, the cool kids that now show and going to bring in more entrepreneurs, more capital. And, 2020 was once again highest investment by venture capitalists into the space. How is the regulation and the startup, how this landscape is going to look like in the next 2, 3, 5 years?
Yeah, I think in the short term, 2 years, I don't think it'll look that much different. But I will say, and I mentioned before, I think, regulators have facilitated or not hindered innovation. I think that will continue to be the case. I think from the leadership at the national level in the United States, I think, they don't want to, and I think they realize the value of it and don't want to be seen as an obstacle. But there is more and more focus on use of big data, algorithms, anything that they think is a black box, where you have underwriting and rating models out there that regulators don't know what's in those models, and those really aren't filed generally with the state. They get the output of those, but how do they know that the black box doesn't look at race in an unlawful way? And you see, the NAIC and regulators are obviously, with everything going on in our country, are paying much more attention to race and insurance across the board, from hiring, recruiting, and maintaining a diverse workforce, to trying to look through and see whether there is disparate impact on how companies underwrite and rate people. I mean, we call it redlining, and there's studies done couple decades ago, there hasn't been much of a focus, maybe because there haven't been really problems, but we obviously have problems in our country with respect to race. And so no industry is going to be immune to that. So there's much more focus on that now. And that's not going to go away. And what you're going to see, I think, is they're doing it really through market conduct data collection now. Is who's doing accelerated underwriting? There's an accelerated underwriting group that's looking at it right now and going to be asking life insurers to report on whether they use accelerated underwriting. And there's discussions about how those questions will be asked. That'll be a change, and then that will prompt questions about the use of accelerated underwriting. That's not even to decline someone or rate someone a different way. That's just to speed up the process, right? Because of the use of maybe data that they fear that consumers don't know carriers are using on them. So I think a lot of it's just the regulators don't know what they don't know in this space right now, because it's just not their job to focus on technology, and they don't have the resources. They barely have enough to do their job, right? To regulate the companies they have, let alone get up to speed on the latest technology. It's just not their job. And if you're a smart engineer coming out of MIT, you're going to go work for the state insurance department or go work for Amazon, right? They're not able to pay their people. They're terribly underpaid, in my view, and overworked. So how do we change that? And I obviously don't have the answer for that. But you could charge more fees to companies. But in terms of charging more fees, you should get better service, quicker responses, quicker rate filings approved. So there's a lot that could be done there, and hopefully that will change. But there'll be much more attention on this space, use of big data, just like the U.S. government and the European Union are looking at big tech and big data, privacy. The insurance industry is not going to be, insulated from that. So that's going to be, and you'll see some, I think, competition among not only states. You see New York, is the first cybersecurity regulation. They try to be at the forefront of a lot of these issues, which I think helps drive some of the other states to do, and can debate whether they're heavy-handed or not on that, but they're certainly pushing and driving the debate. The federal government's going to get into these areas as well, and the states aren't going to want to be seen as being weak in these areas, so they're going to want to keep up. So it's only going one way. This momentum will only go one way, which is more attention, if not more regulation, of the use of big data and machine learning and all these advanced technologies. And that doesn't mean it won't be able to be used. It's just that if you have a business that you're looking at going anywhere, really, the US for sure, but really anywhere around the world with a developed financial and regulatory system, you have to expect that eventually someone's going to look at your black box, right, and ask what you're doing with it, and how you track customers, and how you sell to people, and what information you keep on them, and that's not going to go away. And so when I think about it long term, you just have to think about it in terms of if you have a technology focused business, how is you just have to assume that you're going to be regulated at some point, right? And you can't just do what you want.
Yeah, I just wonder what kind of a standard, or what can you do to open it up and make it readable and accessible for the regulators, while keeping your trade secret and stuff inside, but giving that
Right.
something that they can actually consume, because they are understaffed. They cannot pay competitive salaries to MIT graduates or whatever graduates that will go, of course, to the big tech. So what can you provide the brilliant people that they do have, so they can quickly go and understand the algorithm? Because algorithm, great, but at the end of the day, those are 1,000 lines of codes.
Right.
There is a definition there. There is the mathematical model behind it. So which can you submit it? Can you make it readable? Is there a standard that they should follow? Which, just saying that actually makes me cringe a little bit. So those are great topics that need to be answered, and will help that relationship between entrepreneurship, innovation, moving things forward in the industry, and of course the regulators that supposed to keep the population safe and, as I said earlier, happy. Well,
Right.
actually, it's protected and safe.
Exactly. I think that what I see happening will definitely happen is, at least in some states, is the presumption will be that a black box unlawfully discriminates, and then the carrier will have to demonstrate somehow why that's not the case. I can see that being the presumption, right? When there's uncertainty. But yeah, I think there's a lot of work to be done, and what we've done, and we've engaged with regulators on behalf of like an ad hoc industry group and others, and had discussions. And because I mentioned the NAIC, which is all the chief insurance regulators, they have an innovation task force, and they've asked for comments. And I think they're engaged, trying to help, but they don't make decisions in the individual states. They're supporting their members. There's a lot of work that could be done that would help facilitate innovation. I think one of the challenges is, if the challenge is a company's got like an algorithm, they're afraid to go talk to the regulator about it, because once you open yourself up, I don't think there's complete trust there that someone's not going to want to ask a lot of questions and keep you from doing it, or keep it confidential, right? And so when you don't have that trust, you're not gonna have that open dialogue and people being proactive. And so everybody just tends to be separate, and then their minds will wander, and they'll make assumptions about the other side. Whereas, the industry will just assume that regulators are out to stop innovation, or that they're out to get them, right? They want to prosecute them. And there's some truth to that in some places, right? They're not making that up. But then the regulators will also assume that the industry doesn't want to open themselves up, and they don't want to share with regulators how they come up with rates, and they're going to assume the worst about the industry. And that's the worst place to be in, I think. And if it continues like that, where you have a more adversarial positioning, I'm not saying that's the case, but I could see it getting that way. And if it stayed that way, that's not going to be good, because then the regulation's all going to be too heavy. It's going to be to solve like one problem that happened, and by doing that, stop everyone else who is actually operating within the law from doing the same thing. I think, yeah, go ahead.
Yeah, so we are reaching the end of the episode.
Yep.
And so before we say goodbye, and usually I ask, your recommendation about the book, but before that, I want to touch one last question about embedded insurance, because this is how we connected. I left Farmers to start Bound. That was, I would say, one of the first embedded insurance platforms. And we had many conversations about what you can do, what you cannot do, because we were pure SaaS. It was all about making the connections, being an infrastructure, and enabling the relationship between an insurance company, an affinity group, or agent, so they can embed insurance. Now, that was 3 years ago. We've been great evangelists. Last year, sadly, we had to shut down because really bad combination of COVID lockdown and budgets. So my question for you on the embedded part is, what are your thoughts about the potential of embedded insurance? Because there are all kinds of people that have different opinions, and here it's more about not just the potential business or the economic, but also from the regulator side.
Yeah. Huge potential, obviously. And I'm doing moderating a panel next week for Insurance Insider Tech on embedded insurance. We have AP Intego, which was acquired by Next not long ago. Hippo, Dave Wexler, who used to be at Comcast in their kind of embedded space. Boost, Aon, which is their affinity business and their travel business, probably one of the original embedded products, travel insurance, travel protection products, and MC Razier from Northwestern Mutual Future Ventures, who's looking at this more from the life and health side. So a really cool panel and talking about it. And we were doing some prep the other day, and the whole panel can really run from this question, which is, what is embedded insurance, right? What do people think it is? And that defines what you think the market is. And I was following like a couple threads on LinkedIn the other day and saw somebody kind of dismiss it as an opportunity because their definition of it is like an insurance product that's like literally embedded in the retail product, like a mandatory insurance or free insurance, or trying to sell someone something they don't want. And that's not the way I kind of look at it. I look at it as like it's more like being connected, continuously connected to your customer, right? It's like why you have any kind of retail product, or like a security system or a home alarm system or sensors to your home, basically protecting your home, right? And Asaf obviously describes it better than I do what their vision is. But somebody buys a home, like they have to buy insurance, home insurance for their mortgage, but like the home is so much more than that, right? It's like where you live, you want to enjoy yourself, and so there's so much opportunity to be continuously engaged and connected to that customer. Hey, we need someone to come fix your window because your window broke, right? Well, you want to fix that because maybe someone can break in or because some water is going to come in. That's going to be a loss to the insurance company. So why wouldn't you want to be involved in that and refer your customer to a maintenance person or home repair person that you can trust, right? And you can have all these partnerships around that. You can have water sensors that tell when there's a leak, in your hot water heater. So many things that you can do with a customer that is not just about, oh, give me a premium and I'll cross my fingers that you never call me about a claim. There's all that stuff in the middle. That to me is what it is, right? It's finding customers wherever they are and figuring out what they need. It's not about, oh, I got a customer and now I can try to sell them something else, right? Another set of knives. It's you have a customer that now you have an opportunity to earn their trust, to build a relationship that you could have over, decades, right? And maybe you can sell them something else that they want, but it's got to be focused on the customer. To me, that's what it means. It's embedding whatever you're doing, embedding your relationship, right? Embedding yourself into a relationship, focusing on the customer. And insurance is just one product you can sell to someone. That's where the opportunity is. And to me, that's unlimited. And that's where you see a $3 trillion opportunity, right, in this space. That's where that's coming from. It's like there's so much area that's not been explored yet, right? And there's a lot of work to be done to really see if it works. But you got to execute on it. You have to have good partners. You probably fail a few times with the wrong partner, but it's about engaging with customers. And it's kind of, I think one thing Lemonade does well is tries to sell a different vision of what insurance is, right? It's not the adversarial relationship, and that obviously has resonated with consumers and public markets. There's obviously more that goes into it than that, but that's the story. I think it's like not the hokey story, but it's the story of like helping people mitigate their risk, which ultimately minimize losses to insurance companies, right? It's why you build houses on stilts near the ocean, right? All that's connected to each other, right? You get the right incentives in place for people to take care of themselves or their home or their other possessions. Insurance is there when something that couldn't be prevented happened, right? But there's so many things that we can prevent with the help of all these other things that are connected to insurance. And so that's the opportunity, right? There's just so much to talk about there, and so many different ways, like workers' comp or homeowners insurance, and safe home, and all these things. Like that's where, but then you got to focus on one area as a business, focus only on that, get partnerships together, and grow from there, and not try to do too much at one time.
Tell me about the beautiful background that you have. Is that a snowman?
No, what is that? Yeah, I think it's like some kind of thing my wife put in there that I have no idea what it is. It looks good in background, but I think it's shaped as a snowman. You got the books that are stacked like nice. I always compare I'm on Zoom calls all the time, probably as you are. and you look at like, CNN or MSNBC, and you see people on these Zoom calls, and you kind of look to see like what model. It's like when you're in the market for a car, you're always looking at what cars are around, but like always looking for backgrounds. I don't like the ones where there's books everywhere where they're trying to show you, okay, yeah, we get it. You've read a lot of books. And their own is obviously set up so you can read it. It's got to be like a balance between there. But yeah, so that's the snowman. But people like the pink color, which was here when we bought this house. Hopefully it's kind of like a nice little calming color. But I tried other backgrounds like the automatic ones we have through the firm, and just like prefer the natural.
Yeah, and it's nice. It's the blue, the gray. There's a nice, and of course the books and that snowman. There's a very nice combination, a nice harmony to that picture. Great. So I'll ask you the last question that I ask everyone. Can you give us a recommendation, life hack, book, TV show, whatever that you acquired during lockdown?
I do watch a lot of television. See, what can I recommend? I watched it a long time ago, but Sons of Anarchy is a great show. It's a lot of commitment though. It's like 6 or 7 seasons, like 15 episodes per season. I just started watching The Serpent, which is actually pretty good on Netflix. Watching Handmaid's Tale right now, which is really good. Very disturbing, obviously.
I haven't seen it.
Some reality TV as well.
Okay, so that's your recommendation. Fantastic.
And turn off. I watched the Social Dilemma. I don't know if you've seen that yet.
Social Dilemma. So far, I must say that I haven't seen any one of the series that you recommended.
No, Social Dilemma is like it's a documentary, but it's some like fictionalized characters in it. But it's about basically like interviewing former Google and Amazon and Facebook engineers, and senior executives, talking about
yes, I saw that one.
Okay, so one of the things I learned from that, which I did immediately when the guy recommended it, was turning off my notifications on like all my apps, even LinkedIn, which I use a lot. Mm-hmm. I'll go to LinkedIn affirmatively. I don't need to see, because it's like how they get you to keep going back to your phone. Oh, I have a message, or someone posted.
Yeah.
Right. You see,
or
it's like opening. Right, and I just turned pretty much all those off.
Yeah, I'm a little bit now. I have a couple of channels that I'm not addicted, but given what's going on in the Middle East, especially in Israel, just bumping, and I need to check what's going on. What's the latest? I have no way to affect it, but only to consume it. And even if I have my opinions, needless to say that I'm not going to share it with anyone, because I'm not going to change anyone's mind.
Sure.
Yes. Mike, thank you very, very much for joining me today, for your knowledge, your time, and the beautiful background.
Thank you. It's great to talk with you. And glad you're doing all this stuff. I have followed some of the interviews you've done. It's been great. It's just a nice part of the community to be in, where people are just talking about issues that a lot of us are dealing with.